Good morning, everyone. Rob Lukey with our Capital Group. Take us a couple minutes to go over some of the properties that we're in currently. Again, you can always go to past performance, put in OCG, and then welcome, and look through obviously the properties that we're in and what's going on with them. You can also, if you have an account, log in with your trader investor. Remember, to have an account, you can simply have an account. You don't, as long as you sign the initial paperwork, you don't necessarily have to make any investments to start out with. You can just look at the software and get an idea of if it's something that you're interested in pursuing or not. But one of the things that you're able to do is, remember, you can place a passive order with OCG that allows us to go ahead and allows you to actually own a piece of a property. For example, that one of the nice things is that if you look at your current holdings when you log in, for example, you'll see here 78% of Los Platillos, 75% of Santa Ana. This is what I own of these properties. You can see the purchase price of it. You can see the estimated expenses and then the P&L. You can also go to it and look, for example, of what's going on with the property. You can look at the notes on it and get an idea of where it is in the relationship to have they started rehab or not. We also will send an email out with a little video of what the property looks like when we take possession of the property and what it looks like, obviously, as we do the rehab and after we do the rehab and clear it out. So, again, I wanted to point that out to you because from a standpoint of individual stocks versus owning a piece of a property, the beta on it, for example, and we've been able to, if you go through and look at, for example, our returns versus the money that we've had invested at any time, we've been doing better than over 20% after expenses to customers if you calculate it with, like I said, what we've had invested in the market at any one time versus total return for that particular year. So all that being said, and when you talk about that type of return and consider the beta on a piece of property versus the beta on an individual stock, case in point, if I buy a Facebook IPO versus I buy a property that I'm buying at a discount, like 17 Los Platillos, the beta is smaller. And what I mean by that is that if you go look and you look at our losses, which we've obviously have had some, and everybody has some in the market as well, 2%, gain of 11%, 48%, 22%, 4%. And remember that these are all in short periods of time, 120 to 6 months. That's one of our longer holds, and that was 6 months, and that's still 4 or 5% in a matter of 6 months. This property, again, was from 2.3 to 323, 48% return. That was our best return ever, but in a month. 4%, 2%, 1% loss. Otherwise, you're looking. So when you talk about beta, this is the biggest loss we've taken on a property, which was 5.58%. So when you talk about beta, you're talking about the overall loss in comparison to what you would expect as far as gains, so on your drawdown. So again, if you're looking at something as an alternative to investing in the stock market, for example, this is a good opportunity for people to get involved that aren't going to go off and necessarily buy a property, handle the rehab, and then go ahead and do that work themselves, that they're looking for a way to invest in the market, invest in the real estate market and into that rehab environment without having to, again, be intimately involved where it could, because frankly, it's a full-time job. So if you're interested in that, feel free to look at our Capital Group, contact us here, answer any questions you might have. And you might want to just consider looking at the software to start out with. Hope everybody has a great day.